All right. Welcome, everybody, to another episode of the Bull in the Cup podcast. We have a very special guest, Edwin Johnson, CEO of InPlay Global. It is the perfect time for this. Everybody is, excited about football season coming back, both the NFL, NCAA. I've always thought that there was this kinship between sports and the market, right? We do a lot of financial market and stock market discussion here, and there just seems to be people who like the stock market, like football, like fantasy football and sports, and vice versa. And I think Edwin and his team have cracked the code of really bringing the market to football or football to the market, which we'll get into and have him explain for us. But we're thrilled to have you on, and I think it's going to be one of the most exciting episodes for our listeners because who doesn't love, the stock market? Who doesn't love football? It's going to be great. So thank you for joining us.
Yeah, I really appreciate you having me, and it's a pleasure to talk to you and your fans.
Thanks so much. All right, David, let's go with some questions.
Okay, tell our listeners what is InPlay Global, and how do you trade sports as stocks, as your website says?
Sure. Well, and great start question there, David. So InPlay Global is a company that has set out over the last number of years to find a path that provides a legal and regulated path under the SEC to provide an opportunity for people to invest in sports performance through synthetic team companies that we create. And it's interesting because we actually create, in the example of the NFL, we will create 32 synthetic companies that are public that are built around the performance of the team, both on the field and off. And we can get into that a little bit more detail. But the net result is we actually have operating companies that people can actually invest in. And depending upon how well they do, hopefully they all do very well and people make money. But in the event that they were to lose money, because it's an actual security that, and let me preface that saying we are currently, being approved, hopefully, qualified very quickly by the SEC. Once we are in full production mode, people will be able to trade these securities just like any other traditional equity product. And if they lost money, that loss would be tax deductible and be able to be carried forward, unlike a gambling loss.
And the names, so Chicago Bears Inc. would be like one of the names of the securities somebody could buy in theory.
So again, we're waiting for a little bit of runway from the SEC on what they would like, but it will more likely than not be the in-play Chicago Bears Inc. as opposed to the Chicago Bears Inc.
Just avoid.
Yes, sir. And in accordance with what we call the fair use doctrine, the information that people will be investing in is publicly available information. And that publicly information, when assembled and packaged properly, does not infringe on any of the rights of any of the teams or leagues. We don't use any logos or anything like that. But that said, we have talked to a number of team owners, and a lot of those team owners have not voiced any objection, as the product that we're aiming to bring to the market is something that allows people to trade athletic events as dynamically as every single play. And it's very compelling to sit there and watch a game visually. And there'll be times where you'll be able to see things that happen on the field that are not necessarily translated in the price of the share. For example, maybe you're a Kansas City Chiefs fan and you want to buy their shares. Patrick Mahomes starts out the first quarter and maybe he overthrows the first couple receivers during the first series. But as an astute Kansas City fan, you're able to see that the receivers were torching the cornerbacks. And it was really an eye-opening opportunity for you because the price and the market may not have shifted. But being that you were an astute observer, you were able to find an edge and be able to trade it from that way.
Oh, you've got people on the edge of their seats. Yeah, Dave's going to have some follow-ups. Go ahead, Dave, because I know he wants to get into the weeds on how this works. It's fascinating.
How is this different from sports betting or fantasy sports or a prediction market like Polymarket?
Sure. Another great question, David. So let's take them one by one. I get confused if I take too many at once. So let's take sports betting. Sports betting is an outcome dependent result. So if you make a bet with, say, DraftKings or FanDuel, and you lose the bet, unfortunately, you have to pay them. If you win the bet, they pay you. So in theory, it's you versus the house. Okay. And when you trade on a prediction market, um, similarly, you have a yes or no outcome, which is a binary outcome. So it's outcome dependent whether or not your contract will have value or no value, because it either stops at 0 or 1. And that 0 or 1 makes it really simple for people to understand. Unfortunately, it makes it a little bit more challenging to trade because the floor and the ceiling are very, very close. So if you're going to be an active trader, someone who doesn't like to have risk on for more than a couple of seconds, that is maybe going to be a more difficult product for you to trade. Fantasy sports, again, similar in nature to the others. Fantasy sports allow people to express opinions, but it's not a bona fide market where you're trading on a play by play basis. And there isn't a central way for people to discover risk and price, a central liquidity pool, which is what InPlay aims to provide. So we are not outcome dependent, and there'll be situations where you may invest in a team and the team loses a game, but the price actually goes up. And I'll give you an example of what I mean by that. So let's say hypothetically, let's talk about the Kansas City Chiefs again. And let's say they're playing Seattle and Seattle's a favored to win that game. And the Kansas City Chiefs play really, really well. And then at the last couple of minutes, something unfortuitous happens to that team. You know, they're down in the opposing team's area of the field. They mishandle a snap. The ball comes out. The other team runs it back and scores, takes the lead, ends up winning the game. Most people might say, well, that loss is going to, be a negative. But being that they maybe outplayed Seattle the entire game, the observers might say, the next few games, I expect to have a lot of output. My background, David, is that I've been a professional trader in my career, and all markets are always forward looking. So what you hear in news today is generally priced in some form. So astute traders and investors in our products will see value in most of these opportunities that something unexpected happens, and they'll be able to go in hopefully and find a way to make money from that.
Oh, it's fascinating. We've done a number of episodes on the stock market where we've tracked particular stocks, and we would talk about how an earnings report would come out, and a good earnings report would come seemingly positive would come out, and the stock would go down, or a seemingly bad report would come out and the stock would go up. And how fascinating that was, that it's not just one data point that impacts the stock price. And to your point, a win or a loss is just a data point. There's other data points that impacts the essential, share price or stock price of the team you're investing in, which is fascinating.
Yeah, I mean it's a great point. And the other thing that we've done that differentiates us from the products that are out there, and let me just say that we're not against any of the products. Okay, we're not against prediction markets. We're not against sports betting when it's done properly and legally, and doesn't try to exploit younger people into thinking that it's easy money. It's very difficult money. I'm a sports bettor. I'm also, a professional trader. It's very hard to make money betting on sports, given the edges that you have to give up. So, for example, I trade a lot of S&P futures, and if every time I made a trade and I was wrong, I had to give up 10% of the value of my trade, I wouldn't be in the business very long.
Yeah, makes perfect sense. And we'll be able to fix the background later, Dave. Keep going. We got a lot more questions coming on this. Fascinating.
Um, who do you expect your earliest users to be sports fans, active traders, retail vendors, hedge funds, or some combination?
So I don't think we're going to get a lot of hedge funds coming out of the box. I think it's going to take a while for the product to be established. When you bring something new to the market, you need three components for the market to behave properly. And I shouldn't say properly. Let's say healthy. In a healthy market, you'll have three participants. You'll have speculators, you'll have hedgers, and then you'll have professional market makers. And the professional market makers are going to be obligated to provide a two-sided liquidity. Regardless if they want to buy, they still have to buy based on their agreements with exchanges. And in my past, I've been a market maker at certain exchanges. It's 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 daunting at times. Generally, it's profitable, but not always. It's not always as fun as you'd like it to be. The the necessary parts for in play is to ensure that the um, market maker groups are comfortable enough to put liquidity onto our books. And we've been working diligently on that for a couple of years now. This product, we actually I started the company 5 years ago. So before there were prediction markets legal to trade, and I remember going to different banks in New York telling them that people would want to trade sports, and they all thought I was crazy. I'm crazy, but I'm not wrong on that one.
No, not at all. And it's fascinating. So let me squeeze one in, Dave, with the logistics here. So if a fan, listens to this and they're like, I got to get in and check this out, and
Sure.
they buy so many shares of a team, and let's say the shares are selling when they buy at $5 a share, and I want you to correct me where I get it wrong, so I'm going to regurgitate what I think I follow. And while maybe scoring touchdowns and playing well will cause the price to go up, because you would think that would cause more people to be interested in that team and find value in that stock, is not a guarantee. This is all part of just analyzing a team like you would a stock, and trying to invest in stocks that have potential to increase. And so what they're
Sure.
doing is just investing. They pay their $5 a share, whatever the price is at that point, and they're rooting for the team to do well, because logically, just like a company does well, if a team does well, the price should go up. But there's a lot of variables there. Do I have that fair?
To a degree, I'm going to get into the weeds now because now
Yep.
it's exciting. Um, when I price a stock, I price it on a couple of things. A stock could have no revenue, but the public appetite may be so large that it's advantageous to buy. And then there may be other, more, I guess, stocks that have been around that you're really trading cash flow to a large degree. How will they perform in terms of operating income? And that's how we've designed in play. So, in play shares have primarily two ways for team companies that we create to make money. We enter into contracts. One of our subsidiaries enters into contracts with all of the publicly created companies, and they earn revenue per win and per tie. And when they lose, they don't earn any revenue. So let's just talk hypothetics.
Right.
If a football team wins a game, every share will earn $5. Okay. Now, the second part of that, which is really interesting, and we're trying to pioneer a way here where we can add additional value to the shares by offering up within our trading environments opportunities for brands to advertise and market to this demographic, which is highly desired. And by letting people advertise different things to sports fans, football fans, traders, we think that it becomes very compelling for them to get their brand in a very efficient, narrowly focused manner. So a team, a brand might want to advertise on a football stadium or something like that, and that carries a lot of weight, and they're great. But we believe at InPlay, we can give that brand something that doesn't exist yet, which is very personalized service with geolocation and the opportunity for them to engage with folks all week long, because within our app, we have a number of things that we're bringing out, hopefully before NFL launch. But we will have a back tester. We will be able to allow folks to create their own strategies with different inputs. They type in, say, if a team's third and long in the third quarter and they make that first down, the tendency of the share does what? And you'll be able to isolate all these different events and trade those. But back to the marketing revenue piece of this. So you'd have a team that can earn $5 on the field. And then, ultimately, depending upon how much revenue we can bring to the table, each of these teams will share a portion of that revenue during gameplay. So you'll match it up. So all of a sudden, this team company now has, they win 10 games. If it's $5, that share is going to be worth at least $50. If they make another $25 off the field with the marketing revenue, that share is worth $75. We're trying to make as big of a splash on the marketing side so that even if someone was to invest money, there's been 3 times, I believe, that an NFL team's lost every game. We'd like to ensure that everyone doesn't lose all their money and that they have an opportunity to still make some on the marketing side.
Yeah, it's not a zero-sum game, which is really exciting, and I think is going to draw a lot of people to it. It's really neat. Go ahead,
It's
AJ.
funny you say that,
Yeah.
David, because it's one of the things that's interesting. If young David was to, say, participate in an IPO and he bought shares at, let's just say $50 for the LA Rams, hypothetically, and they make a great trade, and before the season starts, now they're trading at 60, and you decide that you want to buy them from young David. He sells them. He makes $10 a share. You buy them. You hold them for 2 or 3 games. They go up another $10 a share. You sell them to me, and I decide I'm going to hold them for the whole season. And at the conclusion of every season, we actually close the companies we've created and perform what's legally called a liquidating dividend. And that liquidating dividend will reward shareholders. But in the example I just gave you, David buying at 50, selling at 60, you buying at 60, selling at 70, I buy at 70, and I get rewarded at 80. None of us lost any money.
Right. Right. No, it's perfect. That's going to make a lot of people attracted to this. Yeah. Go ahead, Dave.
Well,
I know you got some more. Yeah.
yes, sir.
Yeah.
Where does InPlay make money?
So we try to make money in a couple ways. Okay. So our goal is to monetize the engagement of the users rather than profit from the users. Okay. So we never take an adverse position to the user. We don't hope a market goes up or down. We built the runway and the field for people to get on the field and then start competing for best price. And ultimately, we provide a number of services that help support the actual team companies to ensure that they can operate at full capacity and provide the most revenue to their shareholders.
Yeah, that makes perfect sense. That's a really good question because part of what we do on Bull and the Cub, we try to understand what's the product for our listeners for them to use, and then we want to know the business side of things. How does
Of
this
course.
operate? Yeah, yeah. Go
Yeah.
ahead,
So
Dave.
we actually have something amazing coming that we're launching on Saturday, which is this fall. We've decided that we're going to do a free to enter, free to trade trading challenge. So it's never any cost to any of the users. They get to experience the in-play shares and how they work, and they get to trade all fall long. And we're trying to put together a nice prize package, cash-wise. We're working diligently with our potential marketing partners to come up with the biggest possible cash prizes. Additionally, we've been very fortunate that we've had a number of universities decide to include the in-play challenge, we're calling it, into their fall curriculum. So there'll be a number of universities out there that the students will have to trade with in-play in order to earn their grade, and we're really proud of that. And we're trying to promote financial literacy as well to stick with the bull and the cub.
Oh, that's fantastic. And yeah, tremendous amount of work. I'll get into that in a little bit because that's fascinating to me. I just hats off to you guys for the amount of work that you put in to get, all the invested stakeholders and the universities and the, NFL and teams to, buy into this concept and be, supportive of it. So that's a
Well,
lot of work.
let me correct you there. We are not endorsed by the NFL or any
Sure.
teams, right? So just so the listeners don't mistake, we are an independent organization. We've spoken to a number of leagues and team owners, and we're excited to hopefully work together someday. But based on our structure, we're not legally obligated to um, necessarily work directly with them. But we are very excited at the prospect of working directly with them.
I think it's in your future. Yeah, go ahead, Dave.
Could this eventually expand beyond football into other sports or even other forms of measurable performance?
It's a really, really good question. Yes, to the first question. So we will also have an in-play trading challenge launch, I believe, at the end of October for the NBA season, as we hope to ramp up and be ready for production trading sometime early in 2027. If the stars align and we get a couple good bounces on the regulatory front, we may be ready to launch as early as January. Um, but again, that's in the SEC's hands, and we're going to follow the full regulatory process along the way. Um, but you bring up a great question, younger David, and that is, does this work outside perhaps of sports? And when I designed this, I had been a victim of a number of what we call in the business tape bombs, where you'll see a tweet or something from a government official rankle a market in a way that maybe everyone wasn't prepared for.
Well, we've talked
And you'd
about
see,
that on prior episodes. We get it. Yeah.
yes, sir. You can see some crazy volatility. So when I set this out, I wanted to create a insulated um, mechanism whereby when I trade, say, retail stocks, if I trade Nordstrom versus Target or something, hypothetically, I only want the exposure between those two. So I really wanted to build something that was uh, based on the interdependency of each other and create synthetic exposure to those stocks as such. So, in the event that we wanted to bring out, say, a retail stock, a retail uh, stock version of this, where people could trade those retailers, and we would put together a basket of 12, 14 different stocks, and the value would only be relative to one another. So everything is interdependent. So you will never have one of those crazy situations where, unfortunately, you have a terrorist attack or some type of war develop. It should not affect the type of shares that we're looking to create.
Uh, yeah, it's exciting for how this can grow in the future into some other areas besides football and with basketball on the horizon. Dave, are you looking to do rapid fire now, or you tell me?
Um, yes,
Okay, then
rapid
I'll
fire
have
is
one after that. I want to ask a follow up after you're done with rapid fire because I want to get into how Edwin got here. It's so fascinating. But go ahead, Dave. He's got tell him how the rapid fire works.
rapid
Please.
fire basically is like very quick questions that you can take your time answering, but they're like gonna be like quick back to back questions, basically.
All right, I'm ready.
Okay. If you were 16 with $1,000 today, where would you put it in?
That's a good question. I mean, it's hard to not be in something related to AI, but the ship's pretty much sailed a bit. Um, I right now, I think we're a little toppy in terms of overall market. I might wait for a little bit of a pullback and then jump in then.
What's the weirdest reaction you've ever gotten when explaining in play?
The weirdest reaction. That's a good question. That's a really good question. It might have come from my wife. I'm not sure. I would say that most people say, "Oh, it's a type of gambling," which is exactly what we're trying to do the opposite of. So it takes a little bit of time and wherewithal for people to listen. into how the structure works and what we're aiming to do. And then, generally speaking, people understand it's not gambling.
Do you think this is something young investors would understand better than old investors?
I do. I think that there's a propensity that people who have affinity to teams and sports, and frankly, more people understand football than they do biotech stocks. And so our aim is to hopefully educate a number of the younger users into how to trade and how to make investments based on decisions other than just gut. And hopefully, anyone who spends time trading with InPlay will develop into a more complete trader on traditional investments as well.
And then one last question for you, stocks or football?
I mean, I've traded for a long time. I'm going football.
It's just more enjoyable.
Yeah. Yes. Yes.
But both give you heart palpitations at times. That's for sure.
I've been around a while.
Let me ask you one more. We're fascinated. I think there's a lot of people who are really interested in the product and the organization you've built here. How did you get here? I mean, I said it's an impossible question to answer in a short period of time, but walk our listeners through your journey and how you got here from where you went to school to like some of your key stepping stones along the way work wise that got you to this point.
Yeah. So I I spent some time after high school trying to figure out what I wanted to do. I went to a couple of different colleges. I did not graduate college, and I wanted to find my way into golf. I was a golfer, and unfortunately, I wasn't good enough to play golf for a living. And one of the guys that I used to golf a lot with was a bond trader, and I've had a pretty good relationship with numbers throughout my life. And I went door to door down at the Chicago Board of Trade and the Mercantile Exchange looking for a job, and most people said no. One group said yes and gave me a chance, and that led me to a crazy. The Chicago Board of Trade and the Mercantile Exchange. When I first started, the floors were still around, and is controlled chaos for sure. And what you think is a straight line definitely wasn't. And I was exposed to a lot of different smart people, dumb people who could trade like crazy, smart people who couldn't trade well at all, um, spreaders, high frequency, high volume, all kinds of things. So ultimately I was a clerk in the Dow pit at the Board of Trade. I was also a clerk in the 5-year no pit. And I learned a little bit of a skill to trade yield curve there. And I was fortunate enough to pick it up relatively quickly and, make a little bit of money and start my career that way.
Oh, it's fascinating. We love asking that question because what you hear from every successful story, while we interview such a variety of people on here, every successful person has persistent and passion. It's over and over. There was a grind in the beginning, a persistence, but a work ethic and a grind there and a passion to, do what they're doing that drove them. And it's just, and impressive to hear, the grind and the work ethic that, went along with your journey. So,
I
um,
appreciate it.
yeah.
I mean, I'm still grinding. These startup businesses. I've done a few trading firms, and I've done InPlay now. They've been incredibly rewarding when you cover a hill that otherwise no one thought you could, and that's really aside from hopefully financially rewarding opportunities, challenging yourself and never giving up. I mean, if I could give one piece of advice to anyone out there who's a business person or wants to be, just can never, ever, ever give up.
It's great advice. Great advice. Any other questions, Dave?
Oh, no, that's all for me.
Well, thank you so much. It was such a pleasure to
Thank
have you, Edwin. Thank you for your time. And in this weekend, InPlay opens. Everybody can go to, where do they go if they want to sign up for InPlay?
And they can go to either of the app stores and you type in InPlay Challenge and you'll be able to download the app. Otherwise, check us out on inplayglobal.com. And I can't thank you. This is my first podcast and my best one so far.
I appreciate that. We can't wait to check it out. Thank you again for your time. Have a nice day.
Have a wonderful day, guys. Thank you.